Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 29th of December 2020. And we once again look at another institution's forecast for gold prices in 2021. This time it's BNP Paribas' turn. So let's take a look. Firstly, just a quick shout out to yesterday's video entitled 2021 Investments, Bitcoins, Equities, Gold and Silver, where we looked at these three investment classes and shared the opinion of some investors and managers as to where they will be focusing their monies for 2021. And also on Sunday, episode 4 of our Bitcoin versus Gold and Silver series, where we highlighted that Scaramucci has launched a Bitcoin fund and what this actually means potentially for Bitcoin's price moving forward. And we've placed links to both of these below. Now recently, Kitco News interviewed Head of Commodity Research at BNP Paribas, Harry Tchilinguirian, hopefully I've spelt his name correctly, who forecasts that the gold market has one more rally in 2021. Now, gold prices today are currently standing at $1,879 an ounce, and we saw them momentarily rise above $1,900 on early hour opening on Monday, but quickly fell back again. Harry believes the precious metal can generate enough momentum for one more push above $2,000 an ounce before the market runs out of gas by the second half of next year. Now, in his year-end forecast, Harry said that he sees gold prices peaking in the second quarter of 2021, averaging $2,010 an ounce. The analyst is relatively neutral on gold for the year, forecasting an average price of around $1,945. By 2022, the bank as a whole sees gold prices averaging the year around $1,900 an ounce. Now, in a telephone interview with Kitco News, Harry said that he is optimistic about gold in the short term as global monetary policies and fiscal stimulus measures will keep the pressure on bond yields and even push yields further into negative territory. Quote, negative real yields will be very important for at least in the next 2 quarters, but after that, the situation changes a bit because people's view on the economy changes, unquote, he said. He stated that gold's safe haven allure in the first half of the year will start to fade in the third quarter due to rising investor optimism, as expectations pick up that the global economy will be able to recover from the devastation wrought in 2020 from the COVID-19 pandemic. Already we are seeing countries around the world rolling out vaccine programs. Harry said that BNP economists expect to see widespread vaccination by the second half of the year. Quote, we're likely to see the nominal yield, especially on 10 years, go up. And of course that brings a real yield backup, which is bad for gold, he said. By the time we get to 2022, the macro risks associated with the COVID outbreak begins to recede considerably. And as a result, safe haven demand for gold should also recede. All those investors who had their funds tucked into gold, they're going to start reconsidering their allocation and start moving back into risky assets, unquote. So that's his view. Now, over the past month, we've reviewed a number of forecasts and forecasters, with most of them ranging from between $1,900 to as high as $2,300 for 2021. Not a particularly widespread or divergence of opinion, with only perhaps the likes of, say, Harry Dent forecasting much lower prices, but that's not new for Harry Dent, and the normal pumpers forecasting much higher prices. And of course, there's no need to mention them here because we all know who they are. Now, we felt that Forbes categorized the situation well, in our view certainly, just under a week ago, when it published the following, quote, "The big question for investors and traders is whether the gold price is going to make another record high next year, or whether we will see the downward trajectory continue its move. The answer is very much dependent on a few factors. Firstly, it's all about containing the coronavirus and any other future variant of these viruses. If we are successful in this task, it is highly likely that investors will favour riskier assets, which may not work well for the gold price. However, if the coronavirus situation doesn't come under control, traders will seek shelter in safe haven assets, and gold prices will likely move higher. Secondly, the economic data, the stock market, and businesses' actual health are completely out of sync. That is because the US stock market is still sitting near its record high, while enterprises are consistently forced to close. With a new variant of coronavirus, chances are that lawmakers are likely to keep their guards up entering the first quarter of 2021, and that they can reinstate more lockdowns. Struggling businesses are more likely to file for more bankruptcies, and there are greater chances that it will create more shocks for the global economy. Such an event could once again help the gold price to move higher. Something that is surely going to influence the gold price is the trend in the dollar index, which is determined by the Federal Reserve's monetary policy stance. According to the most recent Federal Reserve meeting, it was clear that the Fed is more optimistic about the economic recovery, and this made them upgrade the growth forecast for the US economy. Once again, if the virus is contained and COVID-19 remains under control, the Fed will likely change its stance towards its forward guidance. This means that the Fed could start preparing the market to begin scaling back from its asset purchase program. If the markets perceive the Fed's stance as hawkish, it's likely to bring life to the dollar index, which could be negative for the gold price. Bottom line is that the gold price trajectory in 2021 is very much dependent on the coronavirus situation. If the situation continues to improve during the first quarter of 2021, investors will favour riskier assets, and that means lower gold prices for the rest of the year." Unquote. Now, it is very difficult to argue with that assessment. After all, it is a sober assessment, which no doubt many investors and money managers will follow. We're already seeing equity markets moving to all-time highs, primarily for two obvious reasons. The first, they're looking ahead and they're seeing that the vaccine program now being distributed or introduced in most areas is likely to have a beneficial effect on future economic performance. And it is important, and the one thing one learns when studying equity markets is that, in theory at least, they do tend to look ahead rather than what's happening today. So they're seeing positive news moving forward. The second reason equity markets are doing well is because, let's be quite blunt about this, they're expecting more financial stimulus, greater relief packages for those businesses and individuals suffering hardship, and more stimulus being pumped into the economy by governments. That in itself will prove beneficial for those markets in the short term. Anyone who studies economics will know that constant stimulus cannot go on forever. However, followers and advocates of MMT, or modern monetary theory, which basically advances the prospect of spending your way out of recession, of which there is some evidence, but not enough in our view to prove absolute, They believe that more spending will save the economy. We've already seen, to some degree, sufficient evidence of this after the 2008-9 crash, where everyone thought the whole economic system would go into permanent collapse. Decline, then collapse. That did not happen. All that occurred was they just massed more debt. And that can go on for much longer than many people anticipate or project. One day it will stop, and that is when we will have the economic reset that so many people talk about. But that could still be months, if not years, away. And we're of the opinion it's years away. However, what matters is what you think. We'll be publishing our forecasts for 2021 in the next couple of days. But meanwhile, do share your thoughts. And if you haven't already done so, kindly subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.